Let's take a look at our 60-minute chart of the S&P 500, and we'll take a look at what happened in the last week. This chart shows you this grayed out area, which is the overnight trading, and lots of stuff does happen, of course, overnight. And then the white area is the trading during the trading session. So that is what a 60-minute chart looks like, and a lot of the intraday traders, of course, are looking at charts like that. Take a look at Monday, and you'll see there's some news came out that the U.S. said that they had softened their stance on the Russo sanctions, and aluminum plunged after that news came out, and that actually gave the market a sell-off right in here, but then it started to come back. But then news had come out that investment manager Gunlock had come out and said that he wanted to short Facebook. I actually did also at that point, and Facebook got a hit, but did better later in the week. Google and Facebook here, you can see on Tuesday, lead the FANG stocks lower as NDX reverses down. This is clearly the worst that the market had acted all week long, and we expected a decline into midweek. 10-year yields got over 3% on Tuesday, and then Cat warned in the morning, and when that Caterpillar news came out, the market really started to plunge, and we got a very big decline in there. It was kind of sluggish overnight here on Tuesday night, Wednesday morning, and then Boeing and Twitter reported earnings, and they were strong, but just simply not enough, and the stocks dropped. Twitter, I'll show you, looking pretty bad right now, and Boeing recovered a little bit of that pullback, but still not looking great to me either. Then we got a rally here all day Wednesday, and then Wednesday after the close, Facebook reported earnings that were, well, very strong, and the market ticked up after the close here on Wednesday. It bounced around here all night Wednesday night. Jobless claims came out here on Thursday morning when they were the lowest since 1969 as the job market continues to tighten, and we got some signs of wage inflation coming in when we got the report on Friday. So here's the ECB. Their policy came out unchanged. It didn't really move the markets very much, but then we got a strong day and this move up here on Thursday, and then it got a little choppy late in the day. On Thursday after the close, Amazon comes out with their huge beat. That's this bar right over here. But you could see all night long, it just really didn't do a whole lot in there. The GDP news came out. It was up 2.3%. That beat the estimate of 1.8%. And that growth did slow, however. We come down from almost 3% down to 2.3%. Wage inflation picks up at a 2.7% annual rate. Market did okay on the opening on this Amazon news, opens up a little bit, but then the Russell got weak. It pulled the market down. Tech started to drop. Apple went to the downside, and Amazon gave up about half of what was that 130-point gain. And then the market pulled back pretty sharply, but then you could see the buying coming in again. And here we are with about 2 hours to go in the trading session on Friday, and we can see that, well, there is not a lot going on here as the market just simply this last day, these last few hours, just moving, chopping to the side. It's our goal to always be improving our service. And our stock market charts, well, they're pretty complex. And some people, they don't want to subscribe to our top-level service, getting our charts on their platform. So we've created a new product, essentially a service that describes our stock market analysis for everybody. Short-term traders, swing traders, investors. This is just an amazing service, and I'm going to show you very quickly what's in here. This is the Ask Slim Stock Index Report, and it's beta. The reason it's beta is because we're testing it out. What we want to do is see, do you like it, and get your feedback. The stock index report has got several pages to it. We start out with the cycle conditions, and you can see that we talk about monthly condition, and we give you the whether or not it's bullish or bearish or neutral. We do the same thing for weekly and the same thing for daily, and even give the dates that we expect if there's a decline for the correction to come down to an end. So it's pretty good information. The next thing we'll show you is our momentum conditions, as again, we're looking at monthly, at weekly, at daily, and even at 2 hours to give you a sense for the momentum conditions of the market. Really very, very valuable information. This is our daily momentum chart, and you can see it's 3-month daily looking at the S&P 500 and the NASDAQ and the Russell. And we update this on Sundays, so that you will, on Sundays is when the update comes, and our regular full update comes on Thursday morning. So you get a picture of this a couple times a week. Here is the 2-hour index and our proprietary market condition indicator. Once you learn to use these things, just amazing for your shorter term trading. And this is our weekly cycle analysis, and we do this on the S&P 500, the NASDAQ, and the Russell. We show you our projections and our cycle analysis, and we do the same thing on the daily chart, and we do an overview where we look at all the time frames and explain them to you. Essentially, you'll be able to get this brief explanation every single week, and then have this great feel for the market. It's a ton of information that you're going to get in the stock index report. All you have to do is become a level 1 member. It is free right now because we are in beta test, and for level 1 members, get the archive to our Market Week show. You'll be able to go back and look at things that we've said and learn our analysis. You'll be able to get our special videos. We keep adding videos in there for free for our level 1 people, and the stock index report. This is no cost as we are in beta and we're testing it. This huge amount of information, well, we'll give you this full update on Thursday and interim updates as needed. Usually on the weekend we'll do one also. And we're doing this for free because we want your feedback. We really want to get a sense for how much you really like this product. And the promise is that I'm making right now is that if we adopt it, it's going to be an extraordinarily low monthly fee. So you can help us right now by subscribing, becoming a level 1 member, and then getting all of that. For the next few weeks, we're going to continue to do this and look for your input, give you all this great information. If you need any help with the subscription and signing up for level 1, just write me at slim@askslim.com and I'll help you that. So the stock market, it followed what we had thought really closely. We thought it would fall into the mid portion of the week and then get a bounce. That was just spectacular, as it was really spot on and followed the patterns, well, almost perfectly. So much that it came down and touched the bottom of the minor support zone that you can see right in here, and then got the bounce. And it's now bouncing into a minor resistance area. So we believe that this rally and this decline right in here was setting up another upside move. Now, some people are saying to me, well, this looks bullish. Why wouldn't you be looking for much higher prices? Well, the thing is that what we're looking at is our intermediate patterns, which are really negative, and showing us that it's very unlikely that rallies will be able to hold up. Now, we're going to look for the potential of that 78.6% right there, because we're in, see the dotted line here, we're in this rally right over here. This projection is a little bit lower because, well, I want to be more pessimistic, but there is the possibility right over here. These prices that we're looking at are 26.78 and 26.95. I believe that early part of the week we're going to get up into that zone up there and then roll over. This little dotted line right there is a minor VTL, and that could be the area that holds it. It could pop up through it and then move back, so we're looking at that. And right now that's at around where is that? That's around 26.87 or so. So that it gets you right into that area that we're looking at. So those are important numbers right there, and we kind of think it's going to try and then roll over. So attempted rallies fail, falling in that area. Late week and next week is when the risks really pick up. So we think we're going to do something like this and then roll over, and then we get into this period of high risk. Man, these periods periods over here, which line up with the intermediate weekly patterns that are pointing down, and we've been talking about late May. Well, this is a period of extraordinarily high risk. We're going to be looking for a big failure into that period. In the meantime, for the coming week, we're going to look for attempted rallies into those areas, get up a little bit, and then not be able to follow through, and then roll over. We're noticing a little weakening in the Russell, which really has been the strongest of all of the indexes. That may be significant in here. We'll see if that then becomes the leader. Now we're getting past most of the earnings season. There's not a lot of upside drivers when we're looking at it right now, and we kind of think that we will see the stock market not be able to hold the upside, and the risks, as I said, really mounting.
I'm going to the city and I'm gonna do a stage show. And I know all my fans wanna learn how to make some dough. I've been creating